Hello, friends. Welcome to the Good, Bad, and Ugly weekly review. As you can see, it is getting colder, and the market is also going into cold storage. The markets remained extremely dull this week, virtually flat after last Friday's big fall. And I was hoping that this week will remain in a consolidation mode, and it has remained so. It has not fallen below last Friday, and that is a relief for this week at least. Uh, for this week, from our research desk, there was a lot of fantastic stories regarding investor behavior, um, some case studies on NVIDIA, on crypto, how the young investors are helping the surge in the markets, um, market breadth studies, stock market dynamics changing and how it impacts the changing narrative in the market, and US markets, just hogging all the limelight, and many more stories. So you can get all of this on the Weekend Investing app and as well as on the Weekend Investing blog. Of course, always read the full disclaimers and do subscribe to the channel if you haven't so far. So now let's come to the Nifty chart. You can see this was the Friday I was talking about, the huge gap move down that happened after this gap on Thursday last. But this week we have sort of retained the same range as this Friday candle. And for now, this is maybe looking like a flag in technical terms that you consolidate for some time and then you continue in the same direction. Uh, but maybe if another week or so goes by without any damage, net damage, then maybe we are building a base for a recovery. Too early to say, but 0.96% on the Nifty this week. Again, very, very close to the 200 DMA. In fact, on all 4 days of this week, Wednesday was a holiday. We attempted a 200-day DMA breakout. I don't know if you can see it, it's small here, uh, but failed each time. That is also giving a signal that there are sellers who come into play as soon as the market starts to go up. Uh, for the weekly candle, you can see this week was a nothing week versus what we had in the previous week, and hence to say that we did not fall this week and hence the fall is over will be premature. We need to consolidate for many weeks maybe before we can start back up if we are going there. Otherwise, next week onwards, there is a chance that we may waterfall into this level also. That is not ruled out. All will depend upon what kind of narrative will now precede the budget announcements. There's a lot of chatter about rate cuts, income tax rate cuts. God knows if that is coming true or not. Um, there's going to be a lot of chatter about Donald Trump's first announcements once he comes into office in January. So January is likely to be a very volatile month in my view. S&P 500 up 0.67%. So even the US markets took a dive. So I think we from here till at least till the budget, we may just follow the US markets. That is the sense that I would guess at this point. Gold was up 0.46%. Gold has been stable given the fact that US dollar INR has been slipping very hard. uh, we have now gone to 85.7, I think, as of yesterday, and closed at 85.5. Dollar index is also rising. So, dollar strengthening probably is never good news for FII flows towards emerging markets. So, this leg, as long as it is very, very strong, I don't think FIIs will reverse at all. So that's a danger signal right here, that what if dollar index goes higher and higher, our currency will of course follow suit, and the FII outflow also may also continue to happen. In terms of benchmark indices, Nifty clocked 0.96%. Nifty 500 was even worse. Small cap absolutely flat, mid cap absolutely flat. Nifty next 50 down 0.21%. So nothing happened this week really. Over the last 1 month, Nifty next 50 has been the worst hit at 0.23%, 2.3%, and mid caps and small caps have eked out certain gain. Um, Nifty sectors this week, pharma, auto, and FMCG, you can say, were the leading sectors, 2.3% each on pharma and auto. Metals losing 1.1%. Rest were neither here nor there, plus or minus within 1% range. Pharma also is looks like a uh, dead cat bounce kind of thing, because if we see pharma over 3 months, pharma is right down there at minus 14%. Over 6 months, pharma is here at zero, and over 12 months, Pharma is down up 1.2%. So very, very flattish for Pharma all this while. And on autos, we've had a good year, 26.7%. The last few months were not good at minus 16, but that seems to be coming back now this week in hope of better December sales. A lot of inventory gets pushed because of end of year sales, discounts, etc., so on and so forth. On overall sectoral momentum overview, you can see that pharma, IT, and real estate, these three have on average hogged the momentum scores. We calculate momentum scores basis 1 year, 6 months, 3 months, 1 month, and 1 week momentum. So these three sectors are where, in case you are discretionary traders, you should be looking for setups in stocks in these sectors. These are the front-running sectors uh, of the pack. Although you can see autos and FMCG on a weekly basis have come back up in terms of ranking. In terms of trends, you can see uh, is very flat for this week. There was no change virtually in terms of the number of stocks in CNX 500 above the 50 and 200 DMA. So 35% stocks are above 50 DMA, uh, which is okay. I mean, it's not as bad as it was a few weeks back, and above the 200 DMA is 47%. So about half the market of CNX 500 is above 200 DMA, half is below. So that leaves us sort of neither in bullish territory nor in bearish territory. In terms of trend check on indices, you can see that uh, 54% stocks in small cap index are still above 200 DMA. So small cap universe is still holding up well. 47% is above 200 DMA in CNX 500. Only 42% in mid caps and only 38% in Nifty. So this is telling you that large cap names are really hurting, and Nifty next 50 is even worse at 32%. So if you just uh, take that large cap names of Nifty 50 and Nifty next 50, so then approximately 35%, one third of the market in large caps is above 200 DMA, else everything is down. So that tells you that the market is not in such a healthy position. And if we take a very short term view, 20-day moving average, then also about 35% of large caps are above the 20 DMA, whereas 57% small caps are there. So small caps are still ruling the market. It's very clear from these data, and large caps are still lagging, and others are also the other moving averages are also sort of similarly placed, with small caps and CNX 500 having only 35% above the 100 DMA. So the percentage of stocks in various sectors, if we see now, so again 200 DMA, IT stocks are doing very, very well. 80% of IT stocks are above the 200 DMA. 80% of pharma stocks are above 200 DMA. 60% of real estate are above 200 DMA. So these are as I mentioned, three sectors where the most long plays are happening. And you can see that energy is at zero. No energy stock out of that sector is above 200 DMA, which is telling you some story. PSU banks, only 8% are left above 200 DMA. Public sector enterprise, only 10%. Commodities, 16%. Oil and gas, all below 40% or so, are showing signs of very varied sectors. And FMCG is also 46%. Autos are 40%. So below 40 to 50% is somewhere where you would say that that sector is taking a back seat, and is waiting for some more cues to go forward. Similar would be 100 DMA, and if you go very short time frame, again you can see real estate, IT, and pharma doing their thing here. Large cap top 100 stocks, you can see this week, Interglobe, Bajaj Holding, Adani Transmission, Mahindra, these stocks were doing well. JSW Energy, Vedanta, Siemens, Zomato, these were the worst hit amongst others. So these were the top gainers and losers for this week. In mid caps, you had again Adani come up, Adani Wilmar 13%, ABB Power came up. Paytm has been doing well, so I think we have Paytm in a couple of strategies. Paytm is looking up. Phoenix Mills, Ajanta Pharma, Jubilant Food, Biocon. You can see that there is more pharma here now than before. Uh, and the weakest stocks this week have been KPR Mills, Hudco, Thermax, GIC, BSE, Astral, Irida, Grindwell Norton, etc. So this was the mid cap space, and within the small cap space. This is wrongly worded here. It should be small caps. Intellect Design and Amber Enterprise were leading the pack with Ecom's Drugs, PTC, Kaplan Point, Devyani International. These stocks have done well this week. And Titagarh Wagons, Kirloskar Brothers. And Titagarh Wagons never falls ahead of the budget. But this time there is a lot of fall that is happening here. Kirloskar Brothers, Commercial Engineering, KEC, DOMS, EID, Paris, Saregama. These were some of the big losers in the small cap space this week. The FIDI data remains somewhat similar. So we had 2 days of gains. So 24th was a surprise. We had 2,400 crores of gains, and the next day was exactly the same opposite fall. So this week, you can see that the quantum of buys and sells have reduced also because of holiday season. Most FIIs don't operate in this part of the week of the year. DIIs have been very active and have remained in the buy zone all through. So no change from DIIs, and FIIs probably will resume their selling on first week of January. So that's all I have for this good, bad, and ugly weekly review from Wicked Investing. Do let us know what you liked about this content, what other things you would want us to add to this or remove from here, and that feedback will help us to create a better package for you in the coming times. Thank you so much. Have a good day. Bye.